Good afternoon, everyone, and welcome to another edition of Unlock the Stock. We are really pleased today to welcome We Buy Cars to the platform. And as you know, this platform is specifically designed for retail investors so that they can get to know management and the businesses just a little bit better. Faan and Walt, the CEO, Rech, the CFO, and Faan and Dirk, the Chief Digital Officer, will take you through a presentation shortly. So a warm welcome to you guys. As many of you on the call know, We Buy Cars is being spun out of Transaction Capital and separately listed on the JSE. So this is a great opportunity to get your questions together and to ask management. As you also know, this platform is only possible with our technology partner, Lumi Global. You can visit their website at lumiglobal.com to learn more about Lumi's various AGM, online, and investor presentation solutions. Our host today will be the finance ghost, and he'll be facilitating the Q&A session at the end of the presentation. Mark is hosting a conference in Australia today, so he won't be joining us. But before we start, there are just a few housekeeping rules. Faan, Faan, and Chris will take you through a presentation which will be followed by a Q&A session. Please note that you can post your questions in the Q&A box at the bottom of your screen. The event is being recorded and is available or will be available on the YouTube channel a little bit later on. You will see an email address when we start the Q&A session. If you want to be added to the We Buy Cars contact database, please can you look out for this email address. Faan, we are ready for you to take us through the presentation. So on your side, could you share your screen with us, and I'll tell you when we can see it on our side.
Thank you, Vanessa. It should appear shortly. Good day to everyone, and good day to the finance ghost. We are going to try and keep this presentation short and sweet. It's very difficult to tell you about the whole business in a short period of time, but I do think that it's important to leave enough time for questions afterwards, because we know there are many questions that we would like to address and hopefully create a better understanding of We Buy Cars. I would like to start on the first slide explaining a bit about the history, but I'll do this very quickly because I think it's more important to arrive at where we are today. What does We Buy Cars look like today, and what's our vision and our dream moving forward, because that's where the growth is. And we've had many questions regarding, but is there still room for growth, and what does your moat look like, and what competitive advantages are there? But for everyone to understand that, it's also important to have a look at where we come from and how we managed to get where we are today. So We Buy Cars is over 20 years old. We started in 2001. It was my brother Dirk and I who initiated this business. We never ever dreamed of having such a large business, let alone being listed on the JSE. We were able to buy and sell around 5 vehicles per month between the two of us back in the day. And then this business started growing organically. We learned a lot about the South African vehicle landscape and also about the South African consumer within this motoring industry. So in the first 10 years, we gave our proverbial 10,000 hours on this, and we learned a lot. But we got busier and busier buying more and more cars. We never ever borrowed any money. The business was self-funding, as it still is today mostly, and it's very cash generative. So we were able to grow our inventory every year, and we kept the profits within the business, which we feel is important, especially for a growing business. But we did reach a point where Dirk and I could no longer service all the clients because the need was just growing and growing. So along this journey, there was probably 2 catalysts for growth. The first one is when we started expanding our physical infrastructure and expanding by appointing staff to do the work that we always did. And that served us well up until the point of around 2018, 2019. And by then we had over 200 employees, and we sort of had a national footprint, but not anywhere as close to where we are today. But then we ran into a different challenge, and that was digitalization and the need for systems, because if you don't digitalize and if you don't have proper systems, then you run into trouble. So data management became more and more important. Our website became more and more important, and we had to transform our business digitally. And that is when Dr. Faan and Dirk is to my right here, came in and led that digital transformation journey, which he will talk about after me in detail. So yeah, so that's how we grew today. We currently buy and sell 14,000 vehicles a month, so it's a huge growth trajectory. If we could just go to the next slide, please, which will illustrate where we are today. Yeah, there you can see. So you got the map of South Africa there, and it's important here to understand that We Buy Cars has got two sides to it. It's got the buying side and it's got the selling side. Now, on the map, you'll notice these orange pins, and they mostly represent our buying pods. Now, a buying pod is a sexy prefabricated building that's put usually in a parking lot of a mall, preferably next to a McDonald's or a KFC, so that everyone in the area can see this is where they can go and sell their car. And we've seen a change in the behavior of the consumer over the last number of years with us rolling out more and more pods. People now have gotten accustomed to it, they understand what's happening there, and they use it more and more. So currently on pods, we have around 74 pods, and the strategy is to roll out these pods across South Africa in each and every town, and within the big metros within 10 kilometers from every consumer. We will do that responsibly over the next few years. Now, the black place markers there, or pins, are our car supermarkets, our big car supermarkets, and that is where we sell our vehicles. You would all be familiar with the Dome. In Gauteng, we have 4 adjacent branches also in Gauteng, and then in Cape 3, KZN 3, and then in some of the provinces, but there's still a lot of room to enlarge this infrastructure and also expand it by going into new geography. So there's lots of opportunities there. Currently, the employee sits at around 2,800 employees, and the buyers, just more than 350 buyers across the country. So the buyers aren't only at these spots, they are all over. So let's say you're in Sina, for instance, or in Springbok today, we can buy your vehicle right there. So the buying offering is available right across South Africa, and that's what we do. We buy lots of cars, roughly around 600 to 650 cars every day across South Africa. And all those vehicles then go to our car supermarkets, where they are processed. Now, it will take way too long to explain the whole process of processing these vehicles, but what is important to mention there is that we do a quality check on each and every vehicle that we buy. This is done independently by a service provider named DECRA, so that a potential buyer has got transparency, and in the interest of being transparent with our clients, we then display these DECRA condition reports on our website so that the buyer knows that this vehicle has been checked and they know what they are getting into. It's like going to the doctor and getting a medical. So now you know if there's something wrong and what that might be. And then when we move on to the next slide, we're going to talk about market share. And it's important to know that in South Africa, we sit with around 11 million vehicles on the roads, licensed, registered, and being used regularly. So that's what we refer to as the car park or car pool. And this car pool is growing. It grows and it shrinks in two ways. It grows only from the top with new vehicle sales, and that amounts to around 50,000 new entries into the car pool every month. So let's call it 500,000 new entrants every year. But then vehicle also exits this car pool when they get written off or they get exported or are no longer fit for purpose. On the graph, you can see the fluctuation in new vehicle sales. The black represents new vehicle sales over the year, and you can clearly see how that goes up and down. But the used vehicle registrations that happen in South Africa is very, very stable. So every month, roughly around 150,000 used vehicle registrations will take place, and that's very consistent. So that's a very consistent market that we are in, and considering that we are roughly trading around 14,000, it means there's lots of scope and runway for us to grow into that market furthermore. That's by offering this to more and more consumers and the growing middle class, and extending the life of vehicles. Interesting to know that during a life of a vehicle, it will change owners a number of times, meaning that, and our statistics support this, is a vehicle, once it's bought new, the new owner will keep it for, let's say, 3, 4, 5 years, but thereafter it will change hands more regularly. It's being kept around 3 to 3.5 years once it's a used vehicle. So over the lifespan of a vehicle, it might change owners roughly around 5 times. What this means for We Buy Cars is opportunity, because most players in the market will only play in one segment or a different segment of the market or a certain niche, whilst we will address the whole market and can add value at each of those intervals. We have the data and the systems and the ability to price these vehicles accurately, whether it's a 1-year-old vehicle or whether it's a 20-year-old vehicle. We know what it's worth, and we have the ability to offer a fair price right there and then, and offer convenience at the same time. So that's understanding the car park. If we move on to the next slide, just a quick word on who our competitors are and our market position. We really have a unique business model. So there isn't any single or direct competitor to us in South Africa, and probably not even in the world. But if you have to find similarities, I would say when you look at our vehicle supermarkets, then CarMax in the US would be the right place to look at, because they have a very similar offering, look and feel, and also very successful. When it comes to our auctioning side of the business, which is a very important side of our business, the auctioning side, we currently sell nearly 1/3 of all our vehicles on an online auction digitally. And the one closest to that would be Mannheim, or the Auto One Group, which is in Europe. Mannheim being in many countries. They also have similar auction capabilities. And then our buying side, I would say the one closest there would be WeBuyCars.com. Very exciting company. We visited them many years ago in the UK. We learned a lot from them, and we also have a very similar offering in that regard. So that is our peers and how we view ourselves in the broader market. Moving on to the next slide, what does our growth trajectory look like? And then the following one, we'll talk about how we're going to do this. It's important to understand that we do not only sell to the consumer, we sell to the dealer market as well, which includes the big groups who buy and find the inventory from us in times when they need stock, and that's most of the time they will source stock from us because it's a very cheap source of acquisition. It's a trusted source of acquisition for stock. But then also your independent dealers have been supporting us for decades now. So we call that the B2B channel. Then you got your B2C, that's your business to consumer channel, cash, and then lastly your B2C finance. And that's where we see one of our biggest growth opportunities is to become cleverer at financing vehicles, preparing cars better, and growing that. Currently, roughly sitting at around 20% of total vehicles sold gets financed through the 5 major banks in South Africa, and we believe that we can grow that. We have seen tremendous growth over the last 4 years in that regard as well. Keep in mind that 4 years ago, We Buy Cars bought and sold 7,000 cars a month. That was about the time when Transaction Capital became a shareholder of We Buy Cars, and today we are double that. So there's no reason why we cannot continue on that curve and just keep on doing what we're doing and focusing on the goose that lays the golden egg and achieve over 20,000 vehicles per month. Moving on to the last slide before Wynand presents. Sorry, that was the last slide. So that's then that from my side, and I'll see you in questions. Wynand is going to talk to you about the digital side of this business.
Thank you, Faan. Thank you, Vanessa. Just want to give you a quick rundown on what we call a digital real estate in We Buy Cars, which is supported by our Chief Marketing Officer, Rech. But today we have a multi-moment digital marketing strategy supported by a large out-of-home marketing strategy. This enables us to have around 6 million South Africans visiting our website on a monthly basis, which are around 2 million unique visits per month. And they spend on average about 10 minutes on our website each time. Now, with around 800,000 social media followers. So regarding the platform, or what we like to call the digital business platform in We Buy Cars, in 2018, our journey started. You all know now the business started in 2001. And in 2018, when we started this digital journey, we had to make an important decision. And this decision was, do we build software in-house, or do we go out and procure some type of ERP system that we can get a control over the data, get control over the processes in the business? The one thing that we had in 2018 was we had a business that was 17 years old. We had an owner-operated business. The owners were still currently active in the business. They understood the market, understood the product, and then we had to make this decision. Two important principles guided this decision and was our North Star in this decision. That was, how do we keep control over the software, and how do we keep control over the data? And that's an important decision. And we made this decision to go in-house and to build this stack or software stack in-house. We wanted the business or the software to work for the business, and we didn't want business to adapt to some type of ERP processing. And that was the decision we made. So we started with the development team, and we started building this team and developing the software stack. And what do we have today? Today we have a digital business platform with 2 major factors of one of the biggest moats in our business, and that is that we can have smart decision making or data-driven decision making in our business. So if you ask us, can we or will we monetize our data? The answer is we monetize our data using it internally to make smarter decisions that's integrated into the software stack, firstly. And secondly is the concept of experimentation. Now that means that we can test any idea that we'd like to test on the fringes of this software platform, and if it's a positive result, we can bring it into the core of the business and change very quickly as the market adapts and changes. And that is one of our biggest moats. So what do we have? The development team we have today, we have around 64 people in our team that consists of software development, data science, and business operations. And in this team, we've also invested in a software development house called Agile Bridge to make sure that we have a constant flow of high quality software craftsmen coming into our business, and we can protect that side of the business. As we know in South Africa, good quality software developers is becoming a challenge. So Faan spoke about the channels. So I just want to get to the pricing of the vehicles on the buying side. So one of the most important factors that we do in this business today is to price the vehicle on the buying side. And I just want to give you a feel on how we use data to make sure we price these vehicles correct. So currently we have around 500,000 transactions recorded in the data in WeBuyCars of previous transactions that happened, and we use that data together with market data and all the data that we collect on every touch point with the user as the vehicle goes through the journey of the vehicle or through WeBuyCars. We collect data at every touch point of this. Today we have around 7 billion rows, I think, of data in our warehouse. We process around 80 gigabytes of data per day. So on the buying side, with all this historic data that we have, all the market-related data that we gather, and all the evaluation data, we inform a pricing decision on the buying side, and we'll calculate what this vehicle is worth and how long will it sell in a reasonable time at a reasonable price. And we can reverse engineer the buying price with a margin of safety in that price when we make a purchasing offer, which is fair market price for that vehicle when we want to purchase that. The same principle applies when we sell the vehicle. We use all this data that we collect on a daily basis, and we inform the selling price of that specific make and model and how quickly and fast we want to sell this vehicle and what margin we can control. The important factor here is that we can control buying and selling strategy of pricing centrally in this business. And that is a huge problem when you get to scale. You can't control your strategy from humans anymore. You have to do it centralized through a system, and that's what we have today. So that's on the buying and selling side. And yeah, the last point on the selling side, when we call price discovery, is where we use all this data again to make sure that in a distribution of this specific vehicle, that we sell this vehicle in a reasonable amount of time. And our stock turn days for Jan and Feb was this 2024 was around 29 days. And if you compare that to market, you will see that's quite favorable in the market, or quite significant. So on the selling side, we'll do price discovery, is where we adjust pricing according to any make and model and how quickly we want to sell this vehicle and up our stock turn. So that's from a system perspective. And we'll address some more questions or answers in the Q&A section. Thank you, Chris.
Yes, thank you, Bernard, and good afternoon to you, Vanessa, and to the finance ghost, and good afternoon to your listeners. So my journey with the We Buy Cars team was a little less than Faan's 23 years. I've been with the business for 7 years. I joined Faan and the core team in June 2017. And it's been a very interesting, challenging, and exciting journey, and it's been really exciting to be part of this team. In 2017, We Buy Cars had 1.5 supermarkets. Today, as Faan mentioned earlier, we have 15 supermarkets and 74 buying pods. In 2017, we sold 16,435 motor cars. And in our most recent financial year to September 2023, we sold 141,851 motor cars. So roughly 2,000 a month, growing to, in January 2024, an all-time record for We Buy Cars, where we sold just in excess of 14,000 motor cars. Our profit after taxation in 2017 was 86 million, and this has grown in financial 2023 to 660 million when compared to financial 22 at 762 million. And I'll speak a little bit about that later. Some of the highlights on this journey have been building a property portfolio. We Buy Cars now owns 9 of the 15 supermarkets. You will all probably know and have seen the Dome in Randburg in Johannesburg. And our second biggest branch is the Midstream branch, where we own a 50% undivided share of that supermarket. So we have a 1 billion rand property portfolio, and we have gearing against that property portfolio of 734 million. We have a funding line in place for that with RMB, and we've recently refinanced that property portfolio at a lower interest rate. It's also been a lot of fun building a robust F&I business, and it's been very exciting to see the headcount growing from 329 in 2017 to 2,800 in September 23. We Buy Cars is a level 6 BBBEE rating, which we achieved in December 2023. And this is a special company with special people and a unique culture. Some of the values that We Buy Cars subscribes to are: we give back, we serve people, we lead change, and tomorrow is not another day. You'll see on the slide that's on the screen at the moment that We Buy Cars has recorded a 60% compound average growth in profit after tax from 2011 to 2023. I said earlier I would explain what happened in 2023, so maybe a brief explanation of financial 22 and financial 23. In 22, we definitely had the wind in our sails. We had recently opened 6 branches. It was the period after the COVID lockdown period. And you'll all remember that there were chip shortages and very few new cars in South Africa. So the new car supply was constrained. And at the same time, globally and in South Africa, we saw a 30% price inflation on used vehicles. So I'm sure you'll understand those were all very favorable factors. In 2023, some of these factors reversed. Whilst our volume for 23 was up 12.6% at 141,000 motor cars, our profit after tax was down 13.4%. If we have a look at the next slide, you'll see that this was not as dramatic. Let me quickly move to the next slide. You'll see that it was not as dramatic on the EBITDA line. So the EBITDA line in financial 22 was 1.18 billion and only 3.1% down at 1147 or 1.147 billion in F23. We Buy Cars is a highly cash generative company. Financial 23 saw strong cash flow generation from operations, and this has continued into financial 2024. And I'll speak just now about the transaction capital voluntary trading update. I must quickly explain F21 and F22. So in financial 21, we opened 2 new supermarkets, Springfield Park in Durban in October 2020 and Germiston in June 2021. Opening of these new facilities requires an investment in inventory, as I'm sure you can imagine. And then in F22, we opened 6 new supermarkets. So the Dome in December 2021. We then opened Polokwane on Valentine's Day in 2022. Over the Easter weekend, we opened in Nelspruit. And shortly thereafter, we opened in Riverhorse Valley, which is in KZN. And we opened a 3rd branch in Cape Town, in the Western Cape. A branch like the Dome, as you can imagine, needs an investment in inventory. And when we opened the Dome, we invested approximately 250 million rand in new inventory. A company's debt levels and higher debt levels is always of interest to investors in South Africa. We Buy Cars is conservatively geared with a debt to equity ratio of 32.4% at 31 January 2024. As mentioned earlier, we have 734 million rand mortgage debt or facility against a 1 billion rand property portfolio, and that 1 billion is at historic cost. We also have a 300 million rolling revolving credit facility against approximately 2 billion rands worth of motor vehicle inventory. We have available facilities in We Buy Cars of 684 million and ample headroom on debt covenants. Transaction Capital published a voluntary trading update on the 13th of February 2024 for We Buy Cars for the 4 months to the end of January 2024. The salient features included in this voluntary trading update were units sold up for the 4-month period, 13% at 53,144 motor cars. Revenue up 16% at 7.64 billion. Core earnings up 20% at 267 million. And also very pleasing to note, lower debt levels and cash generated from operating activities of 402 million. This was 57% up on the prior 4-month comparative period. As is evident on the next slide, We Buy Cars has a robust balance sheet, which has been conservatively constructed with low gearing, and the company is well positioned for future growth. Thank you, Faan. That's all from me.
Thank you so much. That was an awesome presentation, very exciting company. And I'm not going to take up any more time. I'm handing straight over to the finance ghost and the Q&A session.
Thank you so much, Vanessa. Thank you to the team from We Buy Cars, and just thank you to everyone who's made time to join us today. It's really great to have you guys here, and yeah, congrats to the team. It's been great to watch the business that you guys have built. Hopefully you can have a lot more luck than Sebastian Vettel had in the Ferrari that I see is at the back of that well-named boardroom that you've got there. I used to go clubbing at the nightclub Dome, so it's amazing that it's now this massive car supermarket. I haven't seen it yet in the flesh, but it would be quite cool to see what it looks like now. So I'm going to jump straight into the questions, but well, before I do that, I do need to disclose I am a Transaction Capital shareholder. So that means I will be a We Buy Cars shareholder on what is it, the 11th of April, I think. So obviously that's an important disclosure. I think I've written publicly about you guys quite a few times and why I like the business and what you've done. Just on that note, so I've already had a couple of questions on this, and I think we just need to be clear that today is very much about We Buy Cars. So I can't and won't ask any questions about, you know, what could happen to the Transaction Capital share price, what will happen to the Transaction Capital balance sheet. This is the Ron management team to ask that too. They have absolutely no bearing on any of those things. So we are going to only ask questions about We Buy Cars. That doesn't mean we're only going to ask easy questions. In fact, I've received a couple that I can summarize quite nicely into a very juicy topic that I want to start with, because we might spend a fair bit of time on it. And it basically just talks to competition. You know, and I guess you guys, I think I said this to you the other day when we did the dry run for this, was you have this unique business where your competitors are busy spraying your name on the window of their dealerships, right? We buy cars. You can go to any used car dealer right now and it says that. So as cute as that is in terms of a recognition of what you've done, I've had quite a few questions come in around, you know, what does that mean for your competition? And I guess the way I'd like to ask that question is, over time, do you think you just become a B2C business because your B2B market is effectively becoming your competition over time, right? They are also literally buying cars. And if we look at your sales trends, it does look like B2C has been a big driver, you know, more so than B2B. So nice, juicy concept to start with. Start you nice and easy. And just any comments on that would be great.
Yeah, let me start. I'm sure my colleagues here would also like to elaborate on that. Back in the day when Dirk and I started this business, we were advertising in newspapers, and we took very pretty pictures of ourselves with money in our hands, standing together and saying, "Contant vir die motor," to really drive the message that we are serious about selling cars. And this was on page 2 of the Beeld newspaper and on all the record papers and the local newspapers across Gauteng. And then after a few months, we saw another party doing exactly the same right next to us on the same page, and we thought, oh goodness, now we have to share this client base amongst us, and we won't be profitable because these ads are expensive. But what we've learned is that it creates awareness. So we're not scared of competitors. I think it's really good. In many respects, it keeps us on our toes. It gives the consumer the surety that we are not a monopoly. There are other entities out there competing for the same business, and you have to be good in your offering, otherwise you're going to lose market share. I think what is a great driver of our growth is also the fact that historically consumers sold to consumers. So if we rewind 20 years back and you look at, for instance, an Auto Trader, about half of the Auto Trader magazine, when it was still a magazine, would have been private ad placements, and you no longer see that. The public is now converted. Everyone uses a service, whether it's We Buy Cars or another player in the market. So we welcome that. And if they want to use our name in the way they've been doing, I think it's good if other people's adverts make them think of We Buy Cars, as long as our ads never think or let them think about the competitors. So that's in short how we feel about these competitors, but we do take it very seriously. We're not focused on them, but we're focused on improving our business every day.
Maybe if I could add on.
Yeah, good.
So the finance guys spoke a little bit about B2C and B2B. And maybe just to say that we really like selling cars to dealers. And when I spoke a little earlier of some of the headwinds that we experienced in financial 23, our dealer partners experienced the same. So at the same time, we were realigning our inventory levels to buy more vehicles in the 150 to 400,000 Rand price brackets. Our dealers were doing the same, and in some instances were overstocked. So some of the reason why we saw in the last financial year a lower percentage of the cars going to dealers was exactly, as I say, to that topic of the headwinds that were being experienced in the industry.
Yeah, and we saw it in the UK, right? At the end of last year. I mean, if you look at Super Group's announcements, they got absolutely hammered in the UK dealerships business at the end of last year. Are there any elements of the We Buy Cars business model that give you some protection against this, like the quick churn of the vehicles, maybe, you know, focusing on used, lower value? Is there anything in there that maybe gives us a bit of comfort that if used car prices do take a dive in South Africa, and I'm not sure what would cause that, maybe the Rand getting stronger, I don't know, then maybe new cars are not as expensive, but any commentary on that I think would help the attendees as well, and me for that matter. I'm interested.
Yeah, it's interesting to understand the dynamics of the market. We've been through these cycles where new vehicle sales are in a slump, and when they're on a roll, when it's very bullish. So right now, one of the reasons new vehicle sales is not where it's supposed to be is simply because of high interest rates, pressure on the consumer wallet, uncertainty with elections coming. People are holding on. So the person who bought a brand new vehicle 3 years ago and who's now due to buy a new vehicle, he's holding on, and that vehicle now takes a bit longer to filter into the used car market. But at the same time, there's more activity further down the line, and then there's a bit of a shortage in certain vehicles in that price range. Let's say in the 2-3-year-olds might be harder to find, and they will hold their value better. So you do get these ebbs and flows. When we look at the bell curve of what we serve, we can clearly see that we do serve the whole car market, and a fair percentage of every year model that's available. Let's say when you look at the 2022 model, not many of them, or not a high percentage of 22 models around are being traded yet, because they are still being owned by the first owner who would only sell later on. And that percentage then grows, and we find that on a 9-year-old vehicle, that's more or less where it peaks, and then it goes down again. So we can adjust our pricing, and what's really nice about the dealer channel is it's like a sluice that you can open, you know, if you're under pressure and having too much inventory, because it's very price sensitive. Wynand's done a fantastic job with his project Velocity, where we are able to price vehicles to end with a certain outcome. So we can now far more accurately determine and predict what seller or who's the buyer of a specific vehicle going to be, whether it's a dealer or a private individual. So we, as Chris said, we love dealing with dealers, and we have big plans for dealerships moving forward. We see ourselves as partners and assisting dealers and playing a big role in their lives. So the one channel that we do want to shrink is that cash channel sitting in between. So the auction channel, which is also where dealers buy most of their cars, that we'd like to grow. Simple reason, you sell the vehicle very quickly. So it's less days on your floor, less tied up capital, and then we'd like to grow the finance channel and become a lot more creative in financing cars, because we feel that the way vehicles have been financed traditionally needs a revamp, and I think everyone in the industry agrees. When I speak to the big banks, they all agree that we need to reinvent the way it's getting done, and we can see that positive momentum happening there. So over time, we'd be able to finance all of our inventory, whether it's a dealer buying it for us or a private individual.
Yeah, thanks. That's really helpful. I mean, there have been a few questions in my DMs around, competition, and we've spoken a little bit about that. And obviously a lot of your competitors would be your sort of other typical used car dealers, often tagged onto an OEM type business, etc. I think what's been interesting for me as your B2C side has grown, and those DECRA reports, I think, have been a big part of just helping people understand what they are buying. I mean, historically, the We Buy Cars brand, I think people have sometimes looked at it and gone like, oh, are you getting a car? There's no real after sales per se. There's no real comebacks. Do you think that do you think you need to do some work on the brand to actually keep growing that B2C market share? Or do you think that it's strong enough, it'll keep going? Or is there some positioning there, some work you'll need to do just to get people to that level of trust that they seem to have? Often not actually justifiable. I've bought a lot of cars in my life, so people have a lot of perception. Is there something you can do about that?
Yes, I think as far as the buying proposition, in other words, the service of us buying an individual's car, I think it's clearly understood in the market, but there is still some or a level of uncertainty within the market. But can I buy from We Buy Cars? How does it work? And educating the broader public in that regard is something we're actively doing with many campaigns. I think we've gotten a lot better at it. Part of our future plans is to have centralized prep centers where right now when we sell a vehicle, we pretty much do the DECRA, we wash the vehicle, but we haven't added any other value like put on tires or took out dents of the vehicle or service the car necessarily, although we do service a lot of cars, especially for the finance channel. But I think that this approach of less haste, more speed, taking our time with cars, and then putting a higher quality vehicle on the floor, or vehicle that's already been, little things that needed to be done on the vehicle. For instance, a replacement of a windscreen or wiper blades or tires, things like that, would really add value to the consumer. So that's a big part of our future plans.
Nice. That's interesting. So I've got some questions as well around Africa. Morocco comes up, and just, obviously you guys have still got quite an interesting growth runway in South Africa, and many a South African corporate has come short, unfortunately, in Africa. There's lots of examples. So maybe don't do Nigeria at the moment. No, I'm just kidding. It's just any commentary around Africa, Morocco, what your plans might look like there. And are you basically picking up the South African business model and just planting it in other African countries? Or just whatever we can talk about there will be interesting.
The short answer is no. We're only going to focus on South Africa for the time being, and really nail our market share here. We have tried to be successful in Morocco. It didn't work out the way we thought. I think Walt in his book mentioned, quite cleverly, that if you see a gap in the market, also ask yourself, is there a market in the gap? And I guess that's what we didn't do. So we did open 2 years ago in Morocco. We tried it there. We didn't spend a lot of money, but we tried it and we decided to close down. So that's the We Buy Cars philosophy, to test and learn and try without betting the farm. So we don't have any real big expansion plans into Africa at the moment. However, we do have a running operation in Namibia that's been started within the last year. It's already paying its own way, so being successful, growing conservatively. But we're not letting that distract us from what's important here at head office, the growth that we want to enable within South Africa.
Great. So I've had a couple of questions around just talent retention and just talent longevity, I suppose. So the one is just, from a management team perspective and as the founders, what sort of runway do you still see for yourself in this business? Are you sticking around for a period of time? And then the other question was, particularly given the reliance going forward and the strategy around a lot of the tech type stuff. There was a question here around, just with demand for professionals in that space in South Africa, just any comments on attracting talent. Personally, I would think that being listed will probably help you with that. But certainly any comments on that and just founders sticking around will be appreciated.
Okay, I'll answer the first part, but Wynand, if you could do the tech part, I think that's important because that's part of his daily challenge. As far as myself as a founder, my brother Dirk is concerned, we definitely want to stick around. We love this business. It's what we do. It's what we live and breathe. I was actually sitting and pricing a few cars whilst Chris was talking, so it's in my DNA. But no, I don't see myself as being the CEO forever. We have a really strong leadership team, a broad leadership team, and I think we've been really blessed in that regard with a fantastic culture within the business, people who really buys into our vision. And so a few years ago, if I weren't around the business, then things would go south. Right now, I think I can take a 6-month sabbatical and everything will be okay. Not that I'm planning to do that, but I have that comfort. So as far as being an exec, love to be an exec for a long time and maybe later on in a non-exec role, but for a shareholder, post-listing, we should be circa around 10% within Dirk and my shareholding, which is significant, and our aim would be to grow the value of that over time and let that be a legacy for our family. So yeah, it's important to us. So we'd certainly be involved in the business in some way or form moving forward. But for the foreseeable future, I'd love to sit in this chair and do what I do. Wynand.
Yeah, regarding technology resources, in 2018, when we started this digital journey, it was quite difficult to get high quality resources into the business. WeBuyCars was just seen as a motor dealership, but today where we are, it's seen as a technology business, so it's getting easier. In 2018, we were running off a Google Sheet. That was the inventory management system. That was the debtors and creditors, this whole business. And we had to get some high quality software and software people to come and assist with this decision we made to build our software platform in-house. So yeah, to be honest, it was difficult in 2018. It's getting easier with time. And yeah, we definitely see with the listing and as a listed entity going forward, we're getting more and more requests for people or high quality software people to come and work for We Buy Cars. Because we see ourselves as a technology business, with security obviously playing a huge role in the business to protect our data, but yeah, to getting high quality software. And that's why I invested in a company like Rech as well, is to protect the flow of software developers into the business as well. And that's why we've done that as well.
Like if there are any SPAR shareholders on this, they'll tell you rather Google Sheets than SAP. So keep
that was the easy decision in 2018. Don't go.
Yeah. I have had a couple of questions about the relationship with transaction capital going forward, which I think are appropriate questions. So there's two. One is just from a decision-making perspective, and obviously they will remain a major shareholder in you. Will We Buy Cars Exco kind of be allowed they obviously won't remain a major shareholder in you. Will there be any kind of influence on anything you're doing from them? I mean, you've got the GOMO relationship, so maybe just interesting to understand how that might work. Or is it this very clean break and even maybe GOMO over time? Probably a sensitive thing to talk to, but maybe helps people understand the relationship going forward.
Chris, do you want to do?
Yes. So, without getting into the 190-page pre-listing statement, transaction capital will unbundle all of the shares that it owns in We Buy Cars or We Buy Cars Holdings. So there'll be a full listing, a full separate listing on the JSE, and transaction capital's shareholders will get shares in We Buy Cars, but transaction capital will not have a stake in We Buy Cars. The second part of your question was GOMO. So GOMO is a wholly owned subsidiary of one of the entities in transaction capital. GOMO is a sixth finance provider on the floors at We Buy Cars. And I think that relationship will continue. We Buy Cars does not have a shareholding in the Gomo finance entity.
May I just mention that we really like the idea behind Gomo, because they want to be nimble and innovative in this finance space, and we're supportive of exactly that, regardless who brings that offering, simply because we'd like to serve our clients as best we can with creative finance solutions that's affordable. I think we've seen that people pay these extremely high interest rates on vehicles unnecessarily, and we'd like to sell a vehicle to someone and let that person be able to come back a year or two later with equity in his vehicle and do business with us again.
I think just on the F&I concept, just a question around sort of how your economics might develop over time. I mean, I've watched, okay, because I spend an embarrassing amount of time on your website. It's tough being a petrol head, but it's very nice to have a company like you coming to the market where I've understood it as a client so well. But as you sort of downscale on, the value of the vehicles, that kind of suggests you might tend towards older stuff over time in your mix. Does that impact your F&I penetration? Because to my knowledge, it is a bit harder to finance an older vehicle rather than a newer one. So just a bit of, I guess just understanding how that might change over time, your product mix. I mean, you've obviously got all these things you need to balance off, and F&I is quite a juicy part of your unit economics.
No, that's a great question, and absolutely not. We actually want a far higher percentage of financeable vehicles on our floor. Now, the banks are more than willing to finance vehicles up to 10 years, and in some instances, even older cars. I think the opportunity for a Gomo or another player who wants to address that 10 and older year vehicle is there. But for us, we have a project what we call pre-purchase velocity, meaning that when we get leads in, and every month we get around 90,000 sales lead, people wanting to sell their cars to us, and then we offer prices on 90,000 vehicles. We probably view in the end around 25 or 26,000 vehicles, and we must make that purchase decision. Now, that decision is not only made by a human, but it's also driven by various inputs that goes into our AI machine and then drives the price on the vehicle. And one of these inputs would be the probability to finance that car, which means we fight just as hard for a very new financeable car as we would for an older car, and in some instances even harder, because that when you finance this vehicle, there's a second stream of income coming your way, and that will weigh heavily in that equation. So the perception of us selling older cars is not really true. It's just because we serve the whole car park. But if you go and use the filter on the website, you say show me cars up to 5 years old, you'll find thousands of them around, and all of them being financeable.
Thank you. And just got quite a fun question, which I'd like to ask, which is just non-passenger vehicles. So I, for one, have seen golf carts recommended to me by your search engine. What else is in there? And is this just, there's a deal on the table and so we'll do it? Or, how do you think about, literally, how do you think about stuff like golf carts, non-passenger vehicles, stuff that isn't a car, I guess?
Some might argue that, you don't go there, but if we at the retirement village buying someone's car and they say, do you want to buy my Fenton trailer as well, we'd certainly buy that as well, even though we're probably not going to make money out of it, but just from a service perspective. But we have started focusing on leisure, meaning boats and caravans and trailers and so on, and that's proven to be very successful. We have a team that focus solely on that, and we probably, without even realizing, the biggest caravan dealer or biggest motorbike dealer in the country already, but by just default. So you have this infrastructure, you have the the website, which brings you the traffic, so you might as well just do that. At the same time, we never really focused on big commercial vehicles, but with the purchase of the dome and the space we have there, this now allowed us to be able to process big trucks, and all of a sudden we're now selling lots of trucks quite profitably. And I'm also very excited about the growth that's coming from there. We have about 7 hectares unused across the road from the dome, which used to be the big parking lot. So we're planning to develop that into a commercial facility and house even more trucks, because that's a real opportunity for us. We've upskilled, we've got the right people, and we're also now building our database on how to price these trucks. It's something that we weren't able to do before, but we're getting there now. So we're already proving to be a big profit driver for us.
I think maybe time for one more question, and it just talks to your website, I guess. And you know what I found really interesting, there was of course the initial attempt to deal with Naspers, and that was blocked by the competition tribunal, I think it was at the time. Maybe it was the commission. And I must say I scratched my head a bit about that at the time, because I thought, okay, I understand that you guys would advertise on an Auto Trader, but why would this be blocked? And I think subsequently the strength of your website has kind of made it clear maybe why the Competition Commission possibly got that one right. But I guess in terms of just converting browsing into deals, I mean, I get hit with Google ads based on cars I've looked at on your site, which I personally find both annoying and highly effective, because then I go back obviously and have a look. So kudos to you on that one. And I mean, to what extent, how important do you think that website is? I mean, it feels like it's pretty core to your business, right? You spoke about it a bit in the presentation. And what can you do to get that conversion rate up? I would imagine that's a key KPI.
Yeah, so we see that as our digital real estate. So if you think about the midstream, any of our branches of Dome, there's so many people driving past the Dome in a day on a daily basis, and they see this as a billboard, and you see the We Buy Cars branding. But on the internet, our website is our digital real estate. The numbers that we've mentioned, around 6 million visits per month, and around 2 million unique visits per month. So that's quite huge for a number of people visiting your website. So from a digital experience, and that's just the entry point into the business. Obviously, inside the business, there's huge systems and development going on. But from a digital real estate, the website is the interface or the digital channel touch point to the consumer. We've launched the app about 2 years ago, and that's doing very well. And we've got big plans for the app, for the native mobile app going forward. But I can't stress enough. I think in South Africa and worldwide, people don't spend enough time, effort, and money on their digital real estate, so like a website, to attract and retain people. We spoke a bit about experiments, and we run daily experiments 24/7 on our website to test even small things like font changes, like color changes, what's giving the best conversion on our lead form that generates buy leads for us of people wanting to sell their cars. So we do that continuously, and then if we have an uplift on a conversion on an experiment, for example, we'll apply that to that application form, and we'll start running a new experiment. Even on the finance applications on the selling side of the business, everything is monitored, tracked, and every click is tracked on the website. We know exactly how many views each car gets. We know exactly how long people stay on a specific car. You spoke about the recommender engine. We know exactly what people are looking for, what the dealers are looking for. We'll recommend certain types of vehicles to them. So we want to build this and make this digital experience when you're dealing with We Buy Cars as uniquely and as smoothly and frictionless as possible. And then when you deal with We Buy Cars on the buying side and selling side of the consumer, to make that digital experience as satisfying as well as possible. The digital contracting, the communication, the WhatsApp communications going after that, and the same on the selling side, on our selling side. When you buy a vehicle from us, we want to make that experience as smooth as possible for the consumer. So we focus a lot on what we call the user experience in the business and the digital user experience. So I can't stress enough the amount of time and effort we spend on that on a daily basis.
Last question before I get into trouble, and literally just hopefully a short answer. I've been asked it twice now in my DMs, so I'm going to go with it. So it's around ancillary income, and 2 people have asked me, would you consider something like a rent to buy or a subscription style offering, something that is growing in popularity in South Africa. You don't have to answer if that's a competitively sensitive thing, but just as a thought around ancillary income. And then Vanessa, I think you can happily wrap us up here.
Yeah, thanks. It's definitely something that we are considering. Creative finance options, rent-to-own models is just that. It's a different way to skin the cat. So yeah, we're all for it. Although I think the rent-to-own models out there is not really favorable to the client. But it works out on interest rates that's north of 28%. So the reason we have not launched that yet is we're not comfortable, with offering our consumers with an offering like that. So we're working on a product that should be better than that, but definitely part of the future, doing rentals, doing subscriptions where you pay a fixed monthly fee and can choose between different cars for whatever need you might have. We'd love to start doing that. And obviously third-party sales being also one of our plans to start doing. We have this sales channel that we have, and if you look at a company like British Car Auctioneers in the UK, who sells 50, 60, 70,000 vehicles a month through the auction system, there's no reason why we cannot start selling on behalf of third parties. And by that I mean fleet disposals, bank repossessions. In fact, we are currently talking to a few of the bank groups who are very eager to start selling their inventory through us, and then naturally also dealers, because dealers might have trade-ins that they don't necessarily want to sell on their floors, and ours would be the ideal channel for them to sell through. So that's why the relationship with dealers is also very important. Thank you, Vanessa.
Hey, thank you guys. Creative finance good, creative accounting bad, none of that please, and no SAP. And that's it from me. Congratulations on building a listed company, and thank you.
Wow. Thank you to everyone that participated today, and especially to Faan, Chris, and Wynand. Thank you so much. This was an awesome session. And just as a reminder to everyone on the call, this will be recorded and will be put onto the Unlock the Stock YouTube channel. And if you want to join us again, the next session is on the 18th of April, and that will feature Bell. So from my side, just one last thank you to the team for We Buy Cars. All the best until the 11th of April and the journey after that. Thank you, everyone, and goodbye.